Welcome, everybody. So, for those who are new to the REI Genius, our $1 million coffee hour, I'm Johnny Lynum, the founder of REI Genius, military veteran turned full-time real estate investor and educator. I'll say real estate investor maybe 12, 13 years ago when I bought my first true rental property back in 2013, and then, started as a fix and flipper in 2015 and got into commercial space in 2020. And now, today, we're going to really be talking about the accredited investor blueprint. So, three powerful, actionable strategies that high income professionals, veterans are using right now to build tax efficient cash flow and to protect their wealth. Strategy number three, the tax advantage investing, self directed accounts. Like, this is an extremely powerful tool to allow you to diversify outside of a qualified plan. A lot of people, I think the number is close to like it's over the 100 billion mark of how much previous employer 401k or qualified plans are just out there that people have left the employer and they don't know where they forgot the money. They forgot that they had an actual not pension, but qualified plan at that job. And so there's a website out there, like, you can check your name and social to see if you have IRA money. I looked it up. I'll share it in the community and drop that in the chat. Just shoot me a private message, LinkedIn. If you want that website, I'll dig it up. But there's a website where you can go and see if you have like employer, retirement accounts that's out there that you forgot about. But with having a qualified plan with a former employer, that you can move that money without incurring a penalty to move it into a self-directed IRA or individual retirement account. And so it allows you to, if it has a Roth component, there's Roth, self-directed accounts as well too, that are completely tax-free returns. But then, most of those 401ks are going to be tax deferred until you take distributions on those accounts. But you're able to invest passively in real estate syndications. You can become a private lender with lending directly to other real estate investors. No capital gains tax on the sales within the account. And there's some legislation now where you can blend multiple retirement vehicles that you own as well too. So a lot of opportunity with former employers. This is huge for a lot of a lot of people with layoffs that are happening in the IT space as well as government space as well too. That now, once you leave that employer, you're able to tap into those qualified plans, move into a self-directed IRA, and now invest in a lot of these alternative investments that previously, based off the custodian that had that qualified plan, you're limited to just a few mutual funds, ETFs that you only can invest in. And so a lot of opportunities there with that. So here, great example, investor used 150K from their solo 401k. They invest in a multifamily syndication. They get the income, the equity gains that accumulate tax-free inside the account. You have the compounded returns that we all know that we get with being able to reinvest the returns and the gains. And you have the flexible withdrawals on the back end. Of course, once you 59 and a half, you're able to start doing those withdrawals and access those funds, once you hit retirement. And the cool thing that having the self-directed accounts that you have, so essentially you're, instead of buying the property in your personal name and you getting the monthly cash flow checks, now, usually with like the multifamily distributions are quarterly. Now those quarterly checks are going to your retirement account and funding your retirement account versus going to your personal check account. And so now that's how you're building wealth. And so now you have access to those accounts, and you can have one self-directed IRA, and you could have, a portion of it, 20% in a syndication, 10% in a crypto fund. You can have 30% that you're lending out to, fix and flippers. And now all those interest payments and return of principal, it all goes back to your self-directed IRA.